All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. So starting off with the S&P 500, we see the market staged a pretty nice rally this week. We had this nice little move off the lows, kind of a mirror of the move down. So we had this A, B, C move down. Then we chopped around and reversed and had a sort of A, B, C up. And you can see here, if I just clean up these lines, there's a bit of a inverse head and shoulders here that has triggered on the SPY here. That could potentially take you up to about 456, 458. So that is in play. So markets may want to make a new nominal high here. But if this fails and we close back below that, that pattern is now invalid. I still think we have some really good resistance around 450 on the SPY here. But we'll just take it one day at a time. This is a really choppy market. October, November can be very turbulent months, as we all know. And, we're just going to take it one step at a time here. But for now, the short-term resistance is 450, but we also have to respect this pattern. Nice little rally up on the markets here. We do have earnings next week. We had bank earnings this past week, and we have tech and a couple of rail stocks and some other big names starting to report this week as well. One thing I do want to point out, though, is if we look at around this time last year, so we both topped out both years on September 2nd. We had this leg down, sort of another leg down, and then a reversal. And we basically had this little rally here at the tail end, or middle of October, actually. This was the 7th through the 12th. And we just kind of had this nice push here, and then a gap. And we got almost back to all-time highs. And you can see the same kind of deal is happening here. We had a leg down, then a gap, then kind of a little bit of a rally, then another lower low, and then we reversed, pulled back, and now we're kind of gapping higher. So we had this reversal here, big gap up, big rally, and then another kind of rally with a smaller body bar on Friday, and we're seeing the same thing. So we had a large body bar, smaller body. So if we were to gap up over the next 2 days, it would be actually remarkably similar to last year. So that's just something to watch. Also, obviously we're giving the market a bit of an upside bias here. I do think volatility has another low to make, but just notice that the VIX did come off the lows really starting in the morning, and if you can actually see it on the VXX a little bit better here, VXX actually closed flat, just down 2 pennies on the day, and had a nice little rally into the last hour there. So there is a little bit of hedging going on as the markets do climb up. So that's just something to keep an eye on there. Also, Russell 2000 IWM had a pretty big reversal yesterday, was up, gapped up with the markets, and you can see here on the intraday, just really sold off all day long, with the majority of the selling coming in the last hour. And that is with, the yield, obviously, it's higher yesterday. So usually the higher yield is going to help the Russell 2000, and yesterday it really did not. And obviously one day does not make a trend, but this is something to keep an eye on. Now, some of the stronger names in the market, IGV Cloud Software, getting almost back up to double top here. That is led higher by Microsoft, which is really almost up to, you should make a case as a triple top at this point. But Microsoft has been a strong name. Adobe, which has been really beat up, had a nice snapback rally, and that makes up a large percentage of the IGV as well. So cloud software looking very good. Also looking good is Tesla. So this channel here is now threatening to break above that. So we do have a break of that channel technically. We'll see what it does over the next couple of days, if it reverses back lower, or if it continues higher and wants to go up and test that double top there. So Tesla's been a strong name. Really is up over 40% now since the low on May 19th, which is just an incredible move, especially for a name of this size. So Tesla has been a strong name. Some of the weaker names in tech, though, Facebook. This has been a dog lately, and we're now seeing the moving averages trend down. And you've already hit this 200 moving average once. If this comes down again, it's going to be a weaker moving average. Also, Apple really just not getting as much of a bounce as some of the rest of the tech names. So Apple has been a little bit weaker, and the semis are still below that 50 moving average, although they're holding up okay and getting a relatively decent bounce, as is the triple Qs. So that is still really just kind of closed right on that 50-day moving average. So triple Q's been in a little bit of a weaker position, and that is, again, I think that yields are just kind of doing some backing and filling, and I think that is the reason for it. So with the higher yield, that is obviously going to put pressure on tech there. So we got to talk about Bitcoin. Let's just flip over here and we'll look at trading view. All right, yeah, so Bitcoin here got above this trend line. So we've been talking about this trend line. I've been talking about it for months, and I said that this would probably be your major level here on the, of resistance if we got up to it. And now we are above that. You see how it kind of stalled out there, and now it's pushing through that. So Bitcoin may have a major sort of parabolic spike here. And we know cryptos are capable of that, and I don't think that 65,000 will be able to hold it if it does that. So congrats to Bitcoin bulls here, as really the last major level of resistance is this 65,000 pivot. We are now above pretty much every other major resistance level. I was expecting a move back down to 20K, but that clearly did not happen. Again, I didn't think that it would happen here. I thought that we would shop around for a few months and then eventually get back down there. But it looks like that is not in on the cards anymore. And one other thing about this, Bitcoin is doing a solo job here. If we look at Ethereum, Ethereum's holding up pretty well, but Doge not doing anything. Litecoin, XRP, Solana's been hot lately, but hasn't participated in this recent spike. So Bitcoin kind of doing a solo job here in the crypto sector. So it's definitely not an alt season move right now. But yeah, congrats to Bitcoin bulls there, as it looks like it is at least headed to double top in the near term. So just flipping back over here, let's just quick talk about dollar index. Nothing too much new to report. It is stuck in this range right now. And if we look on the weekly, we're just building kind of an inside bar here. So here's your bar, your wide range bar, and then we're just chopping sideways. We have a lot of resistance here at 94.50. And so if it's going to get through that, it's going to have to do some consolidation. But you do have the moving averages starting to curl up, starting to get some nice spacing between the 50 and the 20. And so the dollar can push higher, but it just has to do some backing and filling first. So that's kind of where we stand there on the dollar index. Gold. So gold gave back some of those gains on Friday. A lot of this is probably OPEX related, but nonetheless, gold nicely off the lows here. The one area that I do like that is shaping up a little bit better is the miners. So GDX having a nice move off the lows, and finished lower yesterday, but it gapped down and then it was able to rally up. GDX looking a lot better. Also GDXJ. Type this in right there. We go. GDXJ looking pretty good as well, and the same thing on the SILJ. So the miners are actually shaping up a little bit better, which is a little bit more bullish for the metal. You want to see the miners lead spot. That indicates that investors are taking on risk. So let's look at silver. Silver holding up a little bit better than gold as well. Had a little bit of a pullback, but not nearly as bad as gold. Gold almost gave all of Wednesday's gains back there. So silver shaping up better, and platinum exceeded my target. I thought we would stall out around 1025, 1030. We got a nice juice on Thursday, and finished with a little pause day on Friday, but did close back above that 100 MA. So platinum looking very good. Also palladium with a pretty nice snapback rally this past week here, and is now just consolidating here. So it was really oversold, and then it had got a nice little juice there. Now it's very short-term overbought, so it's just working that condition off. But if it can consolidate a little bit more, it can attack that 50 MA, and you probably get back up to the 2300 area on spot palladium. So moving on here, one metal that is doing very well is copper. So we talked about this yellow channel here that we've been in since really May, and copper getting a nice blast through that. And you're actually getting above the 465 area as well. So it looks like copper wants to challenge that double top. And this really kind of happened very suddenly here. You had just a couple of series of little higher lows here. You did hit support at about $4 and did not come down and get this lower area of this trend line, but instead just blasting through that nice 3-bar surge there. Probably stalls out a little bit around here, around 4.8, $4.80. But nice little move there on copper. So that is a near-term breakout there for the base metal. So copper recovering a little bit pretty nicely here on the futures chart. And moving on to crude. So crude is kind of in this bit of you can see this kind of broadening pattern that I've got on here. But crude, nothing really changed here, just kind of continuing higher. And on the weekly, actually, rather, let's take a look at the monthly. As you can see a little bit better. Another broadening pattern that should take you up to about $90. That would be the top. That would be the top side target there for resistance there on crude, and on the daily, the smaller pattern that you have here, you'll probably stall out around 85 or so. So that's kind of your near-term target and your medium-term target there on crude. But crude just holding up really well, and it has been a beast really since the March lows, and it has not had too deep of a correction. I thought this correction would be a little bit steeper. I thought we could at least get down to 57, but crude has just really kind of just been a powerhouse lately. And by the way, this is not good for the U.S. economy, so bear that in mind. But yeah, crude just running away here. Now, nat gas, on the other hand, is kind of stalling out a little bit. So this may want to come down and retest 5, maybe 475. If it gets through that, you'll have a lot of support at about 425 there. So nat gas maybe just stalling out a little bit, closing, kind of just struggling with that 20 moving average right now on spot nat gas. And then lastly, we'll talk about uranium here. So URNM. Breaking out of this range. So last week we talked about this potential bearish pattern that obviously failed pretty quickly and robustly. So URNM getting back up to double top. There is some pretty good resistance here. As you can see, it is backing off there. Same thing with CCJ. A lot of resistance around 26, 27. It is backing off that, but if it starts consolidating sideways, that is telling you that it is going to build strength to potentially attack those areas. And the same thing, of course, on the URA as well. URA actually exceeded that double top a little bit and is now consolidating sideways a little bit as well. But anyways, guys, I'm just going to wrap it up here this week. You guys take care. I will talk to you next week on the chart.